Welcome back to The Dive. Inflation, gold opportunities in 2022, his thoughts on the Robinhood stock, and why he's making his YouTube and Twitter posts private. He is the former Wall Street whiz kid, currently a part of a planning group that provides retirement, business, and estate planning services, and of course, one of our regulars here at The Dive. Peter Grandich is joining us today. But before we bring Peter on, just a quick reminder to smash that subscribe button for me, please. Hey, Peter, nice to see you. Welcome back to the show.
Always a pleasure to speak to you.
All right, so let's start with inflation. How big of a problem do you think inflation is for Joe Biden?
Well, I think it's one of many problems that he has. It's very interesting that it poses a big question for financial advisors. You know, in the old days, when you turned negative on the stock market, you could run to the fixed income market and get a decent, interest rate for your client, at least that would stay ahead of inflation. But now with inflation anywhere between 5 or 10%, possibly more, I don't know what the exact number is, and interest rates still basically 2% and under, that's a huge problem still. And only one or two things can happen. I don't know why everybody's so caught up in this. Either inflation has to come down, interest rates have to go up, or somewhere's in the middle they're going to meet. So it's clearly not only a political problem, it's an investment challenge at this point in time as well. But as far as politicians having to answer it, I think it's one of many that he faces and will continue to face, especially as oil continues to rise and food shortages become more apparent. And the idea of hiding behind a virus, keeping everybody locked down is basically lost. We're seeing countries around the world give that up. So it's one of many problems that he has.
Definitely. All right, so let's move on here. Robinhood, a stock trading app, gave a revenue forecast of less than $340 million, down 35% compared with 2021. The stock is doing nearly 90% from its highs. What are your thoughts on a name like this?
Well, it looks like it took from just about everybody, just not from the rich, and gave to the poor. So it's something I don't involve myself with. But, listen, if you can go back and look at what people were saying when it was at its highs, and to see something lose 90%, I would question continuing to follow anybody, especially the people that were so outspoken about it. I mean, is it disappearing forever? No, I think it'll eventually fit into somebody else's mode. It's the type of company that's probably going to be merged with somebody else. There's this great shakeout coming in the cryptocurrencies. It's underway, and just like the internet bubble, eventually they're survivors, and the more the ones that survive actually prosper better in the next rebound. And maybe that's one of them, but I don't follow it enough to really say anything much more than that.
Okay, so let's shift to gold then. According to the World Gold Council's annual gold trends report, physical gold demand grew 10% to 4,021 tons in 2021. Do you think we're starting to see a sentiment change towards gold recently?
Well, not on the investment sentiment. In fact, I sent you folks a chart that we can look at, and I believe it's the single best graph that anybody's ever developed in almost 40 years for me being in the financial service business. It really shows the emotional trends all investments go through. And in this particular case, gold is clearly between despondency and depression. And given the fact that gold really has had a $200 trading range for the last year, a little above 1,700 and a little below 1,900, yet investment sentiment has got to be the lowest percentage-wise bullish that I've seen given the price of where gold is at. So it's good to know that physical gold demand rises, because in the end, that's what's going to really dictate where the prices go. But you can't get any more bearish sentiment than I think exists. And as a contrarian, someone that loves that, it's the reason why I plowed so much money, in fact, much more than I expected I would, back into the gold and silver and mining share market.
So what's your view on the key price levels for gold right now?
I don't get too caught up in price. I get caught up in cyclical points, and I really think, like I said, you can't get below the depression and despondency. Now, the negative of that graph is you don't know how long you stay in those areas, and that's the only concern. But if price levels, like I said, I think the low 1700s it really is the worst case scenario. And you know what? If you really want to wait till it's absolutely certain the next leg up, wait till it goes through 1900, because then all the momentum players will return to it. So I guess that would be the two things that I would look for: 1700 to the bottom and 1900 to the top.
Okay, perfect. Well, thanks for answering that. So, what was your biggest surprise for the markets in 2021?
Well, it's leaking now. It's finally broken the back of that, but I called it, and I wasn't alone in this, the greatest financial bubble of all time. It was the main reason why I took the biggest cash position I've ever taken, starting past our Labor Day through the end of the year. Uh, I guess the surprise would be is how long they were able to maintain it and keep it up. But what we've since seen, of course, is we've seen that while there was a certain few upper class type of stocks, the rest of the market was pretty well hit in 2021. In fact, there are some great names that people were just 6 months ago making it sound like they were certainties are now down 30, 50% or more. So I guess the surprise would be how long they were able to maintain it. And of course, I think the pleasant news for me, at least, was that the inevitable break came, and that I was able to step aside from it once again. That was, I guess, the most important thing for my greedy little self.
You're ready for it. All right, so we're heading into some pretty interesting times in 2022, or at least that's what it looks like. Looking beyond the precious metals, where are you seeing opportunities for the year?
The only other market that I'm returned to, I got very blessed, because when I wanted to get into the gold and silver late last year, I had already sold out my uranium holdings, which were all triple digit and then some. They've now come back to levels that become very, very attractive again. So outside of gold and silver and maybe copper, I think things related to uranium. I think it's too early yet to go scavenging in the things that are down in the general equity market. Although I did say last week to those that care to still listen that we had an emotional bottom in the stock market and in Bitcoin, and that they're likely to go sideways to maybe even slightly higher over the next several weeks. But I don't think you can really go shopping there yet. And I would continue to avoid the bond market at all costs. If inflation is real, which I think it is, bond prices are going to go down a lot, especially if the Fed ever does step away. If you think about it, they've been half the purchases of all bonds, government bonds. If they just don't make that purchase, how many people are going to still want to buy a bond under 2% when they know things are costing them 5 times the amount of that 2% in the market? So I would say that outside of uranium, I still would focus on the metals and really avoid general equities at this point.
All right, perfect. Well, thanks for that. So, one more thing before we let you go here, Peter. You announced on your Twitter that your Pete Speaks YouTube posts are going private. Could you give us some color on this?
Well, I'm just not going to publicly speak about my personal portfolio anymore, and also tweet each day publicly. One, I think the reason I fell into that is we were home for a pandemic. Here I was sitting in front of the computer. But because of what's transpired in my life, and what I think is left of it in my natural life, I feel I'm called to be more focused on my Catholic Christian faith than I am what somebody may or may not be doing socially or politically or economically, and tweet about it. So my clients will continue to see the tweets privately. I'll still share about the markets in my blog. And of course, when I'm blessed to speak to your organization, I'll be still glad to do it, and I would share my observations. But someone that we both know recently said there are a lot of what they call keyboard warriors out there, and they like to use the safety of their keyboard in order to say things that really aren't nice. And I just don't want to battle that anymore. So I'll just leave it alone, and they'll have to find somebody else to have ammunition to spend their days on the keyboard about.
Definitely. Troll somebody else. All right. Well, thank you so much for joining us again today, Peter. It was a pleasure to speak with you as always.
Well, thank you as always. God bless.
Thanks so much for tuning in today. We'll be back again tomorrow with the latest news and updates, so be sure to stay tuned by hitting that notification bell and subscribing below.